Monday, October 5th, 2020, Maneco 64, home of alternative economics and contrarian views. So the stock market, in my opinion, is the facade of the Potemkin Village economy that we have, not only in the US, but for the whole world. And that's why the central bankers are so desperate to keep the stock market suspended, the stock prices. We saw in March when we had the crash, even bond prices started going down. We didn't have the safe haven flow, so to speak, from the stock market to bond markets, because I think investors know that the only thing holding the economic thread, so to speak, is the stock market, is the all-time high in the NASDAQ or the S&P or the Dow. And that's why the central bankers are desperate to keep rates at zero, to keep doing QE. And yes, they've hollowed out the economies of North America, the US especially, of the UK, of Europe. They have transferred all the well-paying jobs elsewhere to China and other countries. And yes, they were able to keep the economies going the last 20 years through cheap credit, so people could borrow and maintain a semblance of a decent standard of living. But I think now that's all coming home to roost. Am I saying the stock market is going to crash in October? No, I think there's still a lot of people out there, even people who have made good forecasts, cycles, analysts, who think we could have another leg up towards the election. But they don't seem to be very positive in the long term. And by long term, I mean the next couple of years. So I think it's going to be disastrous. It's going to reveal that the economy, not only in the US, but in the UK especially as well, is just a facade. It's all based on debt. And there's very little actually production, manufacturing, real savings. And this is exemplified by the national debt in the US. We've seen it jump over the last few days, over 27 trillion. We're now at 137.7% debt to GDP, this national debt. The US stat clock says that the official budget deficit, that's how much the government overspends every fiscal year, is 3.15 trillion. But it also says that the actual one is 4.2 trillion. So I'm not really sure which one we need to look at. I would say the 4.2 trillion is a lot more indicative of what is going on. So Uncle Sam is really going on a borrowing binge. It's not going to stop. We know they're trying to have another stimulus. It's probably going to be around another 2 trillion. We had 3 trillion back just after the lockdown started. I think it was in reality a 6 trillion one, as President Trump said while he was signing that into law. And it's just getting worse. Another thing that is not good, when you have exploding debt like that, you need to have an income to make sure you're able to service that debt. So I'm going to give you an example here. Back in 2016, the GDP of the US was $18.8 trillion. The debt was just under 20 trillion. Now we're at $19.6 trillion. The GDP hasn't really gone up that much. And we've got this national debt at 27 trillion. But I think the most worrying thing about the federal or the national debt in the US is the fact that it's being forecast to get to 48 trillion in 4 years' time in 2024, right here in the US debt clock. And that's going to equate to 182% of GDP. And that's assuming, of course, that GDP grows. They're expecting GDP to grow from 19.6 trillion to 26.3. Is that really going to happen? Who knows? And that's why I think the stock market is so important, because it gives people confidence that things are good in the economy, and it makes them borrow and spend, and it gives them the wealth effect. And that's why I think it's so important. I think Ben Bernanke has said that. We saw the president of the Dallas Fed, ex-president of the Dallas Fed a few years ago on CNBC, say that the Fed's main concern really is keeping the stock market high through heroin and cocaine. That's what he said. That's what he said QE was, even though nowadays we're told that it doesn't impact the stock market, all the QE. But look at what happened after March when the Federal Reserve announced unlimited QE. And the Federal Reserve is playing right along with this debt scenario. They know that they need to keep the debt going because it's the debt that's the other side of the fiat currency, but it's the debt that's going to bring down the system as well, in my opinion. And I think the stock market is key to it. Yes, there are other things that are keeping things going, like the leverage through derivatives, through the banking system. It's all Potemkin Village, though. As I said, it's not based on a real economy, and I think that's what the stock market is doing right now. It's the facade of the Potemkin Village. So there you go. So let's quickly look at the markets then. It's just gone past 7:30 a.m. London. We're seeing precious metals come back a little bit, especially gold. Gold is down about $7 at 18.92. The range has been 18.90.70 to 19.06.50. So it's down about 1/3%. Silver is up 4 cents at 23.76. Range has been 24.07 to 23.65. We're seeing the stock market up a little bit this morning. The Dow futures up 160 points or 0.6% at 27,850. S&P is up 16 or 0.5% at 3365. The Nasdaq 100 future is up 60, just over 0.5% as well. The FTSE in the UK is up 0.8% at 5938. Currencies, sterling is down slightly at 129.24. The euro's up slightly versus the dollar, not even 0.1% at 117.25. The dollar's up 0.25% versus the yen at 105.58. WTI crude is up 2% at 37.86 or 70 cents. To finish off, the bond market, the 10-year yield has risen a little bit in the last 2 trading days. Right now, we're at 0.71, so it's creeping up. And that's not great for the overall health of the financial system. We don't want to see yields rise too quickly, at least not the Federal Reserve. So it's up 1.2 basis points overnight, the 10-year yield. And as far as stimulus is concerned, I saw that President Trump recently tweeted that he wants to get this stimulus package through. Even the Federal Reserve is saying that they should get the stimulus package through. You'd think the Federal Reserve would be telling Uncle Sam to watch on his spendthrift ways, but it's not. It's actually encouraging it because they will probably oblige and buy a lot of this debt. Not directly, of course, because they're not supposed to monetize the debt. What will happen is that their agent banks, the primary dealers of the world, like JP Morgan, Bank of America, Citibank, or Citigroup, they will buy this freshly issued debt, and right off the bat, the Federal Reserve will buy it from them, and they will even make a profit on billions, if not trillions. So that's how the scheme works. And they need to keep the stock market levitated for that to work. And I think that's the key. That is the Potemkin facade of the economy, the stock market. So they can't let it correct that much. They will come in next time to try to correct it. Will it work? because if things like that worked, there wouldn't be any poverty in the world, and it can't go on forever. I think faith and confidence will be lost in the system, and then people will realize that it was just a facade. There you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to the channel if you haven't yet. I wish you all a great day. Take care. Bye.